So it's 7:30 a.m. in the United States, 1:30 p.m. here in Nigeria, of course about 2:30 p.m. also in Frankfurt. Welcome to today's program. Let's get started. Business Incorporated today, the 3rd of June. Let's look at these top stories we're following today. Of course, the non-farm payroll from the U.S. is the big story that is coming right now as we speak. We'll get to talk about that via the Frankfurt Stock Exchange, Olaf Krieger, in a few minutes. But let's start from what's making the headlines for the next 30 minutes on the program. Nigeria's central bank yet to provide clarity and details of the planned new currencies market regime. In neighboring Angola, the president has appointed his billionaire daughter as the head of the state oil firm Sonangol. Plus, Brent oil price holds around $50 a barrel following OPEC's indecision meeting on output targets. Now let's get started. I'm boosting them over here live to you for the next 30 minutes, half an hour that is. A meeting between Nigeria's central bank governor and local currency traders yesterday failed to dispel uncertainties over the implementation of plans to abandon the narrow peg and adopt a flexible currency regime. Dealers say the Financial Markets Dealers Association initiated the meeting with the central bank governor, Godwin Emefiele, to discuss the policy. The central bank, however, announced last week that plans to abandon Naira's 15-month peg to the dollar, which has overvalued the currency, harmed investments and caused the economy to contract. However, the financial regulator is yet to clarify how the new policy would work, spooking foreign investors long worried about getting caught in the middle of a currency devaluation. In neighboring Angola, President José Eduardo dos Santos has appointed his daughter Isabel dos Santos as the head of the state oil company Sonangol. The move is perceived to be aimed at turning around the company after low crude prices hit revenue. Citing a presidential decree, Isabel dos Santos will head the company after the president fired the entire Sonangol board and appointed a new one. The daughter of the president was born on the 28th of April 1973 and considered by the Forbes magazine to be the richest woman in Angola and the richest woman in Africa. She's worth about $3.3 billion. Look at the European Central Bank under Mario Draghi's nudging up his inflation forecast for the Eurozone area for 2016 on Thursday, predicting price growth would remain below his target through 2018 period as it struggles with cheap energy feeding into the price of other goods and services. The ECB President Mario Draghi was speaking after the ECB kept its headline interest rate unchanged in a widely expected decision. The ECB raised its 2016 inflation projection to 0.2% from 0.1% earlier, seen in the month of March, and kept its 2017 forecast at 1.3%.
Based on our regular economic and monetary analysis, we decided to keep the key ECB interest rates unchanged. We continue to expect them to remain at present or lower levels for an extended period of time and well past the horizon of our net asset purchases. In the current context, it is crucial to ensure that the very low inflation environment does not become entrenched in second-round effects on wage and price setting. The Governing Council will closely monitor the evolution of the outlook for price stability and, if warranted to achieve its objective, will act by using all the instruments available within its mandate. The risks to the euro area growth outlook remain tilted to the downside, but the balance of risks has improved on the back of the monetary policy measures taken and the stimulus still in the pipeline. Downside risks continue to relate to developments in the global economy, to the upcoming British referendum, and to other geopolitical risks.
ECB Chief Mario Draghi on Thursday. Now look at markets feeding on that those statements from Mario Draghi issued today. Investors waited for the latest U.S. jobs data that's now been released. The non-farm payroll figures due right now will be studied closely to see if the Federal Reserve is likely to raise U.S. interest rates anytime soon. The Japan's Nikkei 225 index was up almost 0.5% this Friday. China's Shanghai Composite closed 0.65% higher. In Hong Kong, the benchmark Hang Seng rose 0.5%. South Korea's Kospi index closed out the trading week flat at 1985.84. Australia's S&P ASX 200 index finished up almost 1%, helped by an increase in commodity prices today. We're seeing copper prices up about 1%, driven by stronger demand in Chinese markets, with local metal futures trading higher. Quite an interesting day. Now we're talking about the U.S. non-farm payroll. Yesterday was the independent ADP data. So let's see what the official numbers look like right now with some analysis straight out of Frankfurt. 2:36 in the afternoon, past lunchtime. Olaf Krieger, the DWTV financial correspondent for Channels Television, joining us live now on the program to put some meat on the back of the bones that we've been chewing. Olaf, good afternoon. Thanks for joining us. Look at the U.S. non-farm payroll that's just coming out for us. 160,000 was what is expected to announce. Some say 165. The unemployment data still sitting around 4.9%, not too far from where it was 5% earlier. What's the impact of this, the latest U.S. NPF data for the rest of the trading day across Europe?
Well, just take a look at the billboard behind me, and I think it's more than crystal clear. We are going heavily to the south. We are heavily in negative territory, and the reason behind that may the just announced job data coming from the U.S., and they saying something like the U.S. have created 83,000 jobs in May. This is not a lot and pretty much disappointing. As you can see behind me, heavy losses at the Frankfurt stock market, and I'm absolutely sure that this will have a huge impact also for the policy and strategy of the U.S. Federal Reserve, because the chairwoman of the Federal Reserve, Janet Yellen, always pointed out that the most important key factor for her decision in her former policy, monetary policy, is of course the job market in the U.S. and the data we just have right now, they're just coming in, are very much disappointing, as you can see more than clearly just behind me, and it's going further on into negative territory.
Olaf, I'm really disappointed looking at the nosedive, as you may put it there, from where we were early today when things were calm, from London to Frankfurt, and we're looking at markets, even commodity prices, really stable. Looking at that index behind you, the DX there, really, really disappointing, spoiling the mood this Friday, thinking everyone will go home with a TGIF. But of course, let's look at the commodities market in green territory. Let's squeeze in the OPEC indecision of Thursday, with the jobs outlook that we now have, 83,000, very disappointing from the world's #1 economies. Do you think this is a perfect circumstance, a situation for what you expect from next week trading week?
Well, there was no real breakthrough in this OPEC talks yesterday because there's still no common ground between the oil-producing countries, such like Saudi Arabia and especially not Iran. So I think there was not a breakthrough. But on the other hand, there are many signs, even from the International Energy Agency, that the oil price, which is pretty low and flat the other weeks, will come up, will increase probably in the next weeks if the worldwide demand of oil is increasing as well. But right now, commodity experts are very much convinced that we have to stay a period of time with this low oil price, and especially on this new situation because of the U.S. labor market data, because they show the U.S. economy is not in a good condition, and that means less oil demand, for all economies around the globe, I think.
Yes, Olaf, a very quick one to wrap it up. It looks like the non-farm payroll from the United States will likely upstage the fireworks around Brexit, at least we're starting to next week. Talk to us about that.
Well, the Brexit, I have to say, is another great concern, and everybody here, every trader, every investor is waiting desperately for the decision which is to come in a couple of weeks, and until then, no one really moves. No one is really willing to spend some money to invest in different companies because of this ongoing thing, the Brexit. Will the UK leave the European Union or not, and what happens then? Nobody really knows. And ask 5 analysts and you get 5 different answers, 6 if one went to Oxford.
All right, thank you so much, Olaf. But I'm looking at the index there. The DAX looks like a little bit of a blip beginning to show there. Let's see if the fears of the latest non-farm payroll is beginning to taper off over the next final hours of the European trading day. Thank you. Enjoy your weekend. Olaf, out of Frankfurt Stock Exchange, WTV, financial correspondent for Channels Television. We'll be back in one.